Good morning and thank you for joining us today for the Cyprium Metals Investor Webinar. Today we are joined by Cyprium Metals Managing Director Barry Cahill, who will provide an update on the government approvals and results of the Nifty Copper Project Restart Study, as well as present the recently lodged CYM Restart Study presentation. With that said, Barry, I'll hand over to you.
Thanks, Jane. Who have been with us for quite some time. It's a pretty important part of the growth of our company. Considering really in June of this year, we've only been going with our strategy for 3 years. And at the end of this month, we've only had the Nifty asset for 12 months. We've made significant progress on achieving our objectives and our strategy. And while I understand that this study itself was probably a little bit slow than what we wanted, and no excuses for that, it's turned out to demonstrate quite clearly the robustness of this Nifty project and the reason why we invested in it in the first place and why we obtained it and pursued it. Normal disclaimer, just on the cautionary statement, just so everyone understands, all the calculations and everything that's done in the study have been to a 2012 JORC code resource reserve standard. We've declared a resource, which we did in December of last year. In terms of a reserve, because the open pit resource meshes in with the heap leach retreat, the economics doesn't allow us to declare it as a reserve, and that's us taking a conservative stance against the 2012 JORC code. And the actual heap leach retreat itself, for those technical people out there, doesn't really fit in to anything around the JORC code which will allow us to declare that. But rest assured, everything has been done to JORC standard, and that's the only issue with the declaration of reserve, but I'm just making that quite clear at the start. So just a little recap on us and what we intended and what our strategy is we actually started out to become an Australian-focused copper developer and producer. And of course, as everyone knows, with COVID over the last 2 years, it's ended up being West Australian because we seem to have this sky-high border around us. But nevertheless, it's good. We've basically pursued projects, put them into our portfolio, and we were always targeting to start production of copper metal plate from a project, and Nifty's been that. And right now, we're still targeting commissioning that in the first half of next year with metal plate by the second half. Again, our portfolio is over 1.2 million tonnes of copper, which is going to grow because we're going to put another resource out. And for those who don't know, we made another release to the market today about the last drilling from the southwest part of our drilling program within the resource, and remembering that the southeast is yet to come. Got that large land holding in the Paterson province. And, we're following this global electrification thematic. And I note for those who, again, haven't noted, the copper price is over $10,000 US again this morning, which is bloody fantastic. But it's only fantastic if you're plating copper now. So that's why we're in this rush to plate copper as fast as we can. And as of the end of December, we've still got 25 million in the bank. A little bit about the company, but you can look at that yourself. And now straight into the results of the restart study. And remembering this restart study is about phase 1 Oxide pit, remembering that in terms of the project itself, there's this potential plus 20-year mine life because we've got the phase 1 Oxide with the heap leach retreat, and then we've got the sulphide underneath. And there's a slide in here, I'll talk through that a little bit because the crew's been really busy on working on that life of mine as well. But anyway, 146,000 tonnes copper plate produced from phase 1. Free cash flow, $544 million, so between 80 and 100 million a year. And of note for people who have concerns about rising costs and things like that, what we've seen in this time period that we've been doing this work is that although costs have been rising, the revenue side, so the copper price itself, has risen along with them. So as inflation and all those pressures we're under on costs has gone up, the pricing's gone up. So we've actually maintained our margin of what we thought we were going to start with when we first engaged on this project. So that margin of 80 to $100 million of cash flow has remained right through that, which again just goes to show that copper really is a bellwether metal. it really does maintain its profitability without those huge fluctuations that you might see in other sort of metal markets. C1 cost came in at just under $2 a pound, $1.91, and the C3 at $2.82, which again, if you have a look at pricing today at over $4.50, has maintained that cost per pound to revenue per pound margin that we started out buying this project at. And you can see that in terms of our revenue, the pricing that we've used and what the pricing is today. Pre-production capital 149 million and maximum cash drawdown of 193 million. So the 149 million is what has to be spent from now. All the other costs have been sunk that we spent prior to this, getting this ready and up to this point. So the 149 is what's required from now. And that maximum cash drawdown is what's required from now, which includes all the working capital requirements. MPV at 7%, 277 million, and an IRR of 37%, which is heavily leveraged against copper price. And we've got some sensitivities later on that show that with a 3-year payback. And most importantly of all, that phase 1 oxide pit only consumes about 10% of the mineral resource estimate, which for those who remember is well over 700,000 tonnes of copper in resource. Total mined and stacked, which includes the heap leach retreat at 26 million. And then copper recoveries, heap leach retreat 85%, oxide ore 90%. So we first went in looking at the recovery of the heap leach retreat at 85%. We've done our test work and basically it's come out like that. Now what we're doing is running our optimisation on reducing reagents while maintaining that retreat recovery. So why is the oxide ore higher? Well, originally the heap leach that we're going to retreat had a 70% recovery on grade. And if you do 85% of the remaining 30%, add it to the 70%, that will give you the over 90%. And our test work to date has demonstrated that it's over 90%. We've used 90% because we want to be a little bit conservative. And there's a few other things about the metallurgy that I'll talk about later on, which are really, really exciting and interesting for us. From a technical viewpoint, probably from an investor viewpoint, it's probably not exciting, but for a technical viewpoint, it is. So this is the pit shape that we've got for this phase 1 pit, and you can see the old pit shape. And if you have a look at the release today, you'll see that we're actually drilling into the envelope of this pit shape, and we're actually still drilling the limb to the south, which is intriguing. So there's a bit more to be done here. And then we're also drilling the eastern end, which the results are yet to come. We're drilling out here. So you can see that the whole thing has got a bit more in it, which we show later. But importantly, if you just remember what that shell looks like, I'll go to the next slide. You can see the colours are the staging of the phase 1 pit. So you can see that's the pit shape with those colours. This shape around it is the life of mine pit that we're currently in the stages of optimising. So you can see the difference in size. You can see the heap leach pad here. You can see how it eats through the heap leach pad. And you can see how we're looking at this plus 20 years operation that we promised. We've already started our sulphide metallurgical test work. We've got a chalcopyrite sample, which we've crushed. We should agglomerate today. I was hopeful we'd agglomerate last week, but it looks like we're agglomerating today. And then we'll do our column test on it with our current mix of reagents, just to see as a cider test what the results are, but we're pretty confident that we'll get somewhere with it. So again, that's commenced. If that sulphide metallurgy is not as successful as we think, then we've still got that big concentrator sitting on the lease ready to go that we can fire up and we can produce a copper con. But ideally, obviously, we'd like to do sulphide heap leach and produce copper metal plate for a number of reasons. And as I said, it's a long life pit operation, and you'll see the sulphide resource, which is still open at depth, remember, the sulphide resource is certainly not closed off, is nearly 34 million tonnes at 1.8% copper. So a substantial resource on its own. So it really, really bodes well for the future for us. So a bit about the open pit physicals. You can see 8.8 million tonne, 0.87%, 6:1 strip ratio. Reagent consumption test work's ongoing, and it doesn't include the inferred resources because, as I said, it's been calculated and conducted as a reserve. If it wasn't for that economic meshing with the heap leach retreat, we would have declared a reserve. But it's got 96,000 tonnes of copper and inferred resources within that pit shell that we've discounted out, that are yet to come back in. And then again, that's why that drilling is so important for us, because that drilling is drilling into those inferred resources and extending. And if you can do your calculation yourself, that material is mined as waste and taken to a waste dump. If it goes from inferred to measured or indicated, then it goes to ore. And you can see it makes a significant difference to the cash flow, just that bit as well. And as I said, we're updating the drilling into the pit shape, the mineral resource estimate, and we should have it this half. Our poor old busy, tired crew are madly working on that as well. So they've really been putting a big effort in a quite a difficult time labour-wise. So thanks to all of them and thanks to their ongoing work. Then the next one, after we do these reagent optimisations, we're going to go to the core and we're going to have a ping at some of this native copper that we're seeing in our core, as well as go through a few other tests on optimisation. The retreat, again, which is really, really interesting. We agglomerated. So one of the initial problems with the heap leach was the lack of permeability in the clay materials. So we've got this material and we've agglomerated it, and you can see this is the residue. And you can see the particle shapes and the particle size maintained through that treatment process. And right till the very end, it's still allowed solution to percolate down through that material and obviously extract copper. So the permeability of the residues is fantastic, and that's really overcome a historical problem that was at Nifty. So that's really positive. What our metallurgical team are working on now is they're working on reducing the amount of those reagents to agglomerate as well as optimising reagent consumptions on some other things we throw in there to activate and release the copper. And the cure and leach has been the key to the recovery, is how we handle the cure, which is when you put the reagents in and you let it sit, and how long you let it sit for, and then what you do when you leach it, which is put the fluid on via drippers or sprinklers, and it goes through and it carries the copper out of the heap. And that's been some really, really good work again by our metallurgical people. The other thing we found, which is again really interesting, is there's always been this view that there's unrecoverable copper within the copper species or the copper minerals. We've found that's not the case. So what we've done is we've done mineralogy before and mineralogy after we've extracted the copper. And what we've found is all the copper minerals that were available to be leached have leached. That's the full suite. And the only minerals that haven't leached are those that are stuck in the middle of a particle. So if you have a big particle of rock and there's a mineral right in the middle of it, and the leaching fluid can't get to it, then it doesn't leach, obviously, because it can't get to it. And that's to do with crust size. And anything that's available for the fluid is leached. So that's really, really important, because there's this view that there's material or minerals in there that couldn't be leached. So we've disproved that. So that's been really, really good as well. And we continue to work on that, because obviously with occluded minerals, crust size becomes important. So we're working on that cost benefit on crust size as well. A bit about key project metrics. 25,000 tonne of copper per annum out of the SXEW, which is the original size of it. The pre-production capital, 150 million. Maximum cash drawdown, 200 million. We've basically got all the financiers that we've been engaging with. They're starting to come back to us now. Data room will be opened and they'll get back in the data room, and they'll have the model, they'll have the final study, which we've now released to the market. And as quick as we can, we'll end up with some term sheets. We've already got a couple of preliminary term sheets already, so we'll get some term sheets, shortlist, and then make some decisions about finance, and then come out to the market and make finance. At this stage, we'd like to finance the whole lot, obviously, one way or t'other. I don't know if there'll be an equity component, which is a question that always seems to come up, which always will come up. But at the moment, we're aiming to finance a lot. And as you can see on the finance basis, that it's a really, really strong project. You can see operating cash flows, the free cash flows, and all those sorts of things, paybacks are really, really strong. So it is a really, really good, strong project. And then, of course, in the pipeline, in terms of financier and getting in with a company like ours, we've still got this pipeline of Maroochydore and Murchison to come. So we've got 3 of the best copper projects in Australia and certainly in Western Australia. And we're going to build them and we're going to produce copper metal plate, which is what we said we're going to do all along. And sorry, sometimes we're a bit slow, but we're working bloody hard to do it. And there's not many companies out there that can produce this sort of detail and this sort of report in under 12 months, which is what we've done. And to build this business in 3 years to basically 3 big projects that are all open, and we've already got 1.2 million tonne of copper. So keep watching this space because we know where we're going and we're going to achieve it. We're going to produce copper metal plate. That's what we want to do. And again, you can see the leverage, and leverage against copper price is where this is all at. It's amazing. Just a bit on this, the project size, you can see those lease boundaries. Outside those lease boundaries, just so everyone's aware, that's they're still our leases. That's actually part of the IGO JV. So we're still the owner of the leases. So don't think that boundary is our boundary and there's some neighbour there. We're the neighbour, just so you know. We just talk about the state agreement lease that we've got for Nifty. And you can see the waste dump. You can see the pit, how that comes out. You can see where the heap leach pads are on the SXEW. So you can see it's a substantial project. It's got a substantial life. Bit on the sensitivities, which again you can view for yourself. And all of this is in the releases. A lot of detail in the release. So there's all the costs are broken down. So people that are that way inclined can go and break it down for themselves and have a look and see what we've done and what we've allowed for. But you can see we changed the US dollar copper price to today's dollars, and you can see we get nearly 200 million on cash flow and 100 million on MPV, lift the IRR by 12%. So really leveraged against copper price. All the other costs, by the way, that I've been talking about in terms of capital and cash flow are all Aussie dollars, just to make sure everyone understands that. I just talk about US dollar copper price because that's what's in the market and people understand. If we vary the FX, so the Aussie to US dollar, again, you can see 90 odd million of cash flow and nearly 50 million MPV plus 6%. And then there's a few variations on costs. But as I said, what's been happening is we've been making allowances for costs. I nearly said creeping up. Some of them haven't crept up, like freight's just gone ballistic. I think in the medium term, some of those freight costs will drop back down again, but you can't allow for that. You've got to assume that they're going to be high and just go with the high. And if they drop, then good on you, you're in front. But we've allowed for that, labour increases, all that sort of stuff, the supply. We've got long lead items to purchase position. And basically what we've said is some of our items are plus or minus 5%, but on average, the study's plus or minus 10%, because there's some items that are a bit, where they're not material or a bit looser in terms of cost. And again, that's in the cautionary statements and that. Government approvals, again, fantastic effort from our team of our own people and our consultants to get all these done. So at the moment, there is only one approval that needs to be lodged, and that's the state agreement amendment proposal. But the minister can't approve that until the environmental approval is done, which is this works approval and licence, which is an amendment. So we haven't submitted the state agreement proposal because it's just going to go into the minister's tray until this works approval and licence is done. So we'll lodge that in the coming months, and then that'll go through a process. But this was the one that was the key on the timeline that we got done. All the government departments are pretty busy because they're short-staffed and all that. So we've allowed those long lead times that we talked about in December, but we can't guarantee that an approval is going to come at any time. But they're all in. So the works approval's in. All our NVCPs are in. They were in before Christmas, as you're aware. Mining proposal closure plans, PMP, and our licence to alter all the water. There's also some other minor ones like our magazine approval and things like that, but they're only minor. These are sort of the major ones that we've got. And basically, we're now in a situation where we wait for queries or further information requests to come back, and we've just worked through those items if there's any. But so far, the government department's been pretty good with us, and you know, we've been pretty honest. They've been honest with us, and hopefully they can get them done as quickly as possible. But obviously, as I said, they're understaffed, so they've got a line of approvals. we're lucky they're amendments. Remember, they're all amendments. If they were new approvals, it'd probably be significantly different. But anyway, they're all in. And again, not many people around can put these in the way we did, and everyone's worked really hard right through Christmas to get this done. And I thank all those people that our workers and our consultants that gave up the time to do that, because these are critical to our operation. And then a bit about the opportunities, which brings me back to the release we made today. And again, read that in detail, because in one of the sections, you'll see that one of the holes has opened up this southern side. A lot of the holes are into these gaps, which you can see here in these ones. They've gone into gaps in the mineralisation, which means they're either in inferred or there's no mineralisation. But a few of the holes, particularly some of the better ones, actually move up this southern limb. And you can see there's one particular intersection there. We've got 14 metres at 2.72%, which is bloody fantastic. I mean, you know, any other company puts out an intersection like that, and there's a hoo-ha on the market, we put it out, it goes through to the keeper, because everyone understands that's not us. We're about plate and copper metal. That's what we want to do. We're not about hoo-ha on intersections. We're just going to go and do the job. And I gave a presentation on Friday and I said, we're a bit Nike, you know, like just do it. So again, thanks to everyone who's put a bloody effort in and really done hard work for us. And as I said, we've got the updated mineral resource conversion of inferred resources. Drill results in the southwest. Last one's come out today, but the southeast we haven't put any out, so they're still to come. Metallurgical optimisation of reagents, which is great. Optimisation of leach times. We actually put in 180 days on leach times for those who are interested in that sort of stuff. We actually think we can probably cut them in half, which has got a bit to do with how we do our reagent mix and things like that. And as I say, the resource drilling to the southeast is still open, and it is still open in places to the southwest as well. So a bit of work to be done there. Project timeline, ticking boxes as we go. Mineral resource update will be done this half, so that'll be the last tick in that. Then we're into half two, which is construction. So we get our finance, we draw it down, we get our approvals, get the construction underway, optimise all of these things, and then we start next year, first half, we're commissioning, and then second half, copper cathode, so we're away. Then in the back, there's the usual appendices, which you can go and have a look at for your own benefit. As I said, read the release on the restart study, read the release on the drilling results, and understand for yourself, because as I said, there's a lot of information, a lot of data in those two particular releases, and it'll just show you just absolutely where we're going. Thanks.
Thanks, Barry. So I think this webinar attendee just wants a little bit of clarification on the statement. So the Oxide pit only consumes 10% of the resource estimate, and the resource estimate is roughly 732,000 tonnes of copper. The open pit only pulls out about 76,000 tonnes of copper, and the residual heap leaches are not included in the resource estimate. Is that correct?
Yeah, no, that's all true. So basically, the resource in terms of what's in the pit, and that's oxide and sulfide, it only consumes 10% of that. And then the heap leach is not included in that part of the resource estimates. Yeah, so that's correct.
So how much of the pre-production CapEx has already been spent on site? And does this reduce the amount quoted in the restart study?
No, as I said, basically it starts from now. So the capital is from now. So that's the capital requirement, and so is the maximum cash drawdown. So that really is leading us to the debt amount.
Sorry, Barry, just on that again. So how much debt financing should shareholders expect to be employed for the restart? And will there be an equity component?
In answer to the first one, I'd like to do the lot if I could. And because of that, I don't know if there'll be an equity component. So I don't know the answer to that. We'll get our final term sheets and then we'll see what it looks like from them.
So now just onto staffing. Have the issues been resolved, or is it still difficult to find workers?
No, because our border's still shut. I mean, telling people that our border's open is rubbish, because people's GTGs still getting rejected, quite frankly. So we're still having difficulty getting people into the state, going through a bloody process. So No, it hasn't relieved, but for us, for all intents and purposes where we are, we're pretty well off. But when we go, hopefully as time goes on, because remember, we've got to finance now and then we'll start ramping up the construction. It should have eased off a bit further and we'll get workers coming through. So we don't see any issues with it. We've costed to allow for the higher labour any costs anyway. But yeah, it still is difficult to find workers. Although I must admit, in recent times, there's been a few geologists come available, and I always find them as a lead indicator that things are loosening up. So yeah, there's been a few geos become available. So yeah, maybe it is loosening up. We're just not employing a heap at the moment, but we don't see any issues with it.
And just something on the timing for the life of mine plan. Do you want to just comment on the release timing for that?
Basically, the crew's rolling onto the life of mine now. They want to try and get the optimisation done so we can at least get it to a scoping study. Because I don't see the final resource getting done till this half, hopefully we can put something out maybe early next half. But I haven't touched base with the crew just to see on what they're trying to do, because we're still trying to optimise everything else. But it's got to come out as quickly as possible, obviously, because it's got implications for what we do with the concentrator. So the metallurgy's got to be finished, and then we work out whether we keep the concentrator or not, and then we can get on with it. So it's still on top of one of our priority lists. We'll get it out as soon as we can. But you can see by that picture that we've advanced anyway, because we've got a shell. We've actually got a pit shell, so we know the size of it.
Thanks, Barry. Just another one. So if the resource is increased, will we be able to increase the copper plate production per annum? And if so, by how much?
The plant's rated for 25,000, which we know and which we've targeted. It can actually do more because there's been some design changes in the SXEW in terms of the size of plates and stuff. But the problem is the pre-strip in the open pit in this oxide part is a problem, because obviously there's a big pre-strip to get to that material. In the longer term, I'd like to see an increase in copper plate production. But if you increase copper plate, you shorten mine life if the resource doesn't grow enough. So there's a bit of optimisation to be done there. But ideally, I'd like to see more. But at this moment, I think just with the spatial, the logistics and space and all that, I just think we're going to be stuck at 25. But yeah, if we can, we'll pump out as much as we can, because remember, every tonne extra of copper we make is like free profit, really. So we'll plug out as much as we can.
Another webinar attendee has noted the directors have been buying at high prices, which is obviously very encouraging. Are directors looking to buy at these share price levels now?
I can't answer for the other directors, but I'd just like to point this out to a few people, is that we're in a blackout. We've been in a blackout for nearly 6 months. Directors can't buy at this point in time. And this director is spewing because he couldn't buy, and I still can't buy because there is information that I have that's not in the market. The non-executive directors in another opportunity might be able to, but I can tell you all the management who have been able to have been buying, and it annoys me because they keep bragging about it. So that's why directors can't buy in these stages. We're in a blackout. And in fact, from the 1st of April, we're in another month blackout. Just that I've had some interesting emails about whether I buy stock or not. And if you know the market rules, I actually can't. Sorry. And it's annoying. As you can tell, I'm really annoyed about it because I would have. There you go. That's me personally.
Thanks for that, Barry. So just another one that's popped up. So what are your best estimates on the life of mine oxide production with the new resource?
No idea. The drilling's not finished. This is the problem. It's still open to the east, and it's probably still open to the west in some respects. So when we get the new resource estimate out in the next little while, we'll know. But I wouldn't know. The thing's not closed off. So that's sort of a how long's a piece of string question. And the other thing is this hole to the south is intriguing. So just so those people know, one of the reasons we can't drill more to the south is because the old heap leach sits on top of it. And if you go and drill through the old heap leach, you'll perforate the liner and all the fluid will go into the ground. You can't do that. So you have a look at those pictures and that we've sent, and there's lots of them. There's lots in the older releases. That southern line goes up into the heap leach. So it's starting to get really difficult to drill. So we actually don't know, which is amazing for a mine that's been going for over 20 years, is that you don't know. But that's the reality. I mean, cross fingers, it's great, but we just don't know. So let's see what the next mineral resource estimate says. Let's see what the next round of drilling says, and we'll see where we end up.
So Barry, there's just one here on cash burn. So what is the current cash burn rate and how long is this going to last the company?
Oh, yeah. So, again, there's a bit of a misunderstanding about cash burn rates within the business. So what happened when we took over Nifty, we did all this work, right? We had 3 or 4 rigs on site. We had contractors. We're doing all sorts of work, cleanup and all that. And the burn rate goes through the roof because you're drilling holes and all that. Once we turned off the rigs, the burn rate starts to drop. We're getting through all the assays, so that all drops. At the same time, we did that big program at Maroochydore, if everyone remembers, which cost us a fair bit of coin. Now it's all dropped off and the burn rate's back to between 2 and 3 million a month. So we've got enough cash to last us right through the financing process and into the second half of this year. So the cash burn rate's right down now. We've got people just doing the refurb that they need to do, just the camp upgrade and all those sorts of things. We've done the communications, that's finished, that's done. So all that stuff's still going on, but what we've done is reduce the burn rate until we get the finance, and then we'll smack it again. We'll hit it really hard and go and build this thing.
Very technical one now. So are there any bioheap leaching plans for the oxide or tailings?
Bioleach. Interesting. You know, there's 5 different ways copper leach. Bioleach is one of them. So bug leaching, bioleaching is actually one of the stages that the heat goes through. So we use it anyway. The problem is the bacteria don't have enough energy to actually do all the work, which is why we add all those other things in. So there's this combination of leaching that's going on. And again, for those technical people, they'll know what they are, you know, the ferric leach, the bug leach, galvanic leach, diffusion leach, all those sorts of things. So bugs are part of what we do, but they're not the main game. And I'm a bit funny about bug leaching with inoculation and things like that. And I could talk about this for hours, but the bugs themselves exist in the rock. You don't need to inoculate. So they exist and they're part of the process, but they're not all of the process.
So just to metallurgy now. So is the metallurgy the same at Maroochydore as it is at Nifty?
No, I think, I don't know, but the rock type is the same formation, but the rock type is very different. But one of the bonuses about the work we've done at Nifty is the reduction in acid consumption. We've got a different understanding of acid consumption at Nifty now, and I'm, cross my fingers, very hopeful that some of that learnings can be applied to Maroochydore. Now, the Maroochydore core is currently in Perth, waiting us to finish our Nifty work, and then our metallurgical team will get onto it. So I'm hopeful in the second half. I'm trying to be a bit more conservative because I keep missing timelines and I get getting in the neck over it. In the second half, we should be able to get some results out for that and do some cider tests and just see if it is similar. If it is, away we go, because there's 500,000 tonne of copper there and it'll be fantastic. But, you know, these things never ever usually work that easy for you, but we'll see. So we should know by the second half, I reckon, whether it's whether it works straight up.
Thanks, Barry. Just back to the funding again. So what is the thinking on the likely debt funding mix, and how is the debt market for this sort of project being affected by interest rate and geopolitical uncertainty? So do you expect to include some form of offtake funding?
That's a really, really good question, because I have a view. Like on most things, I have a view. They're like backsides. Everyone's got one. What we're seeing in the market at the moment with the tensions in the world, for most people that know, smelters generally reside in places like China and Russia, funnily enough. So if you're selling copper concentrate into that market, there's a fair bit of risk attached to it. And quite a few institutions, if you like, for want of a better word, have recognised that and seem to be hot in the market for copper metal plate. Because copper metal plate's a final finished product and can be delivered to a manufacturer to produce tube or rod or electrical cable, and it doesn't have this concentrate to smelter issue about it. And we've actually had a fair bit of interest about that, which I think is fantastic. It doesn't look to me like premiums on cathode have increased though, which again I find intriguing. But I imagine that if concentrate gets stuck copper inventories drop, then the premium on cathode naturally has got to go up if the price doesn't go up, because you actually need the physical metal to manufacture. So that's good for us. So what that means is in the debt market is that there's a potential combination of different debt types that we can get, where we might do some offtake funding, which might actually give us the total sum, which is why I keep saying I'm not sure about the equity component of the debt, because we might get some normal debt, we might get some offtake funding, and it might meet the total sum that we require. And we should know that quite quickly, I would think. And pre-selling of copper, we've done that before. We've done thin cover on copper as we produce production metal. We have a hedging advisor who we've engaged before in our previous mines and things, and companies that we will re-engage again. So we will use whatever method we can to finance as much of this project as we can. And that's why I keep saying I don't know about how the final thing's going to work out. But obviously on our quick timeline, we're going to know quickly, and then we'll release it to the market when we do.
Thanks, Barry. It looks like just final one here. So how do you feel Cyprium will be in the long term? Will it be a dividend play, or will income push the expansion?
Oh, again, $1 million question. I look into retirement, so I want a dividend. But anyway, no, look, we basically set down a path to build a mid-tier copper business. And that would logically tell me that we've got to get to 80 to 100,000 tonne of copper metal production to be that mid-tier. The quicker we can get there, the better. The quicker we can make money, the better. And as soon as we can, in terms of those plans, notwithstanding that there's still finance options and to build the next one and the next one and the next one, you know, personally, I'd like to be a dividend player, but we haven't produced any copper metal plate yet. So I can't say whether we will or we won't. We're going to produce copper metal plate. I keep saying it. We're going to produce plate. We're going to make money. And then we're going to do what we do, which is do with our strategy. If we have surplus cash, then we'll do something with, obviously, with the surplus cash. And that's all I can say, because it's not even a discussion point at board level at all, because we just haven't produced copper metal plate and made any money yet. But yeah, as a personal shareholder, yeah, I'd like a dividend. I'd like to be sitting on the beach drinking mango mambos, but got to plate copper first.
Thank you again for joining us today for the Cyprium Metals Investor Webinar. I'm Jane Morgan, and we look forward to updating you again in the near future.
Thanks, everyone. Thanks for tuning in.